Welcome to the deep dive. Today, we're uncorking something pretty fascinating. Wine investment.
hmm
It often feels like this exclusive club,
Yeah,
only for the super rich.
right. That's the common perception.
But what if it's actually more accessible than you might think? What if maybe you could blend a passion for wine with financial planning?
Exactly. And that's what we want to explore. We've looked at some great sources to cut through the noise.
Yeah, to see how this rather intriguing asset class might fit into your world.
Precisely. That idea that it's just for the elite, it's changing fast. Our mission today is really to pull out the key insights, maybe some surprising facts,
Okay.
to show you how it can be a genuinely interesting alternative for a portfolio. We're talking tangible things, actual bottles with, cultural weight,
Not just numbers on a screen.
not just numbers, things that can actually appreciate over time.
Okay, so let's start right there. Why wine? I mean, how is it really different from putting money into stocks or bonds? What's the actual appeal as an investment?
Well, the fundamental difference is you're dealing with physical bottles. It's tangible.
Right. Not a digital entry somewhere.
Exactly. And because it's physical, it needs proper storage, insurance, you need market knowledge. It's different.
Sure.
But here's the interesting part. If you look at the data like the LivX 1000 index,
Okay, what is that exactly?
I think of it like the S&P 500, but for fine wine. It tracks the prices of the 1,000 most traded wines globally.
Got it.
And that index, it's shown really consistent growth over the last decade, often doing better than traditional markets, especially when things get volatile.
Interesting. So it's maybe less correlated.
Very much so. And here's the really unique bit. Scarcity.
Hmm.
Unlike stocks, where a company can just issue more shares,
Right.
every time someone decides to, celebrate and open a bottle of rare vintage Burgundy,
It's gone.
it's literally gone. The supply shrinks.
Yeah.
That consumption-driven scarcity, it's fundamental to its value long term. It just
Mhm.
doesn't happen with most other assets.
That scarcity angle is really compelling. So building on that, what are the sort of key advantages? What really makes it stand out for a portfolio?
Okay, well, first, as we said, tangible asset ownership.
Mhm.
You physically own the bottles.
Which some people really like.
They do. Second, it often acts as a pretty decent hedge against inflation. It tends to hold value when currencies wobble.
Mm-hmm.
Third, diversification. Its low correlation to stocks and bonds means it can potentially smooth out your overall portfolio returns.
Right. Doesn't move in lockstep.
Exactly. And fourth, don't underestimate the cultural significance. You're buying a piece of history, of craftsmanship,
There's a story there.
a big story. And that prestige often adds a premium, gives it resilience. I mean, we've seen top vintages from great producers go up 10, even 15% annually sometimes.
Wow. Okay. That's significant.
It can be, yeah.
But, okay, that leads to the big question. Not every bottle on the shelf is going to do that, right? So what actually makes a wine investment grade? How do you spot those?
Absolutely critical point. You can't just grab anything.
Right.
Professionals look for very specific things. Established producers, first off.
Big names with track records.
Exactly. Renowned estates, proven quality over decades, sometimes centuries. Then limited production, scarcity again.
Right.
Ageability is crucial too. These aren't wines meant to be drunk young. They need to improve in the cellar for decades.
Okay.
Market recognition. Are they tracked by indices like LivX? Are they traded at major options?
So there's an active secondary market.
There has to be for liquidity. And finally, provenance. This is huge, meaning a verifiable history. Where has this bottle been stored? Can you prove it's authentic? Bad storage or fakes can kill the value.
Okay, that makes sense. So given those strict criteria, are there specific regions or types of wine that just consistently tick all those boxes?
Yes, definitely. When you talk investment grade, you're primarily looking at the absolute icons. Bordeaux First Growth, Lafite, Latour, Margaux, those legends.
The classified ones.
The historically classified ones, yeah. And Burgundy Grand Cres, the top-tier vineyards there, like Romanée Conti. Also, certain vintage champagnes, the Krug, Dom Perignon, and some top producers from the Rhone Valley.
So really the pinnacle.
It is. And importantly, you generally won't find these on your local shop shelf.
Right.
They're sold through allocations, direct from the estate maybe, specialist merchants, auctions, or these new investment platforms. That exclusivity is part of their value proposition.
Right. Controls the supply and who gets it. Okay, that clarifies the what really well. So let's shift gears to the practical side, budgeting. How much are we talking here?
Well, general advice for alternative investments, which includes wine, is usually keep it to maybe 5%, 10% tops of your total investment portfolio.
Okay, so don't go all in.
Definitely not. And patience.
Yeah.
You really need patience. Most
Sure.
successful wine investments are held for 10, 15, even 20 years. It's not a short-term play.
10 to 20 years. Wow. So, okay, for someone starting out, what are the actual costs involved beyond just buying the wine?
Good question. There are several layers. First, the minimum investment on many platforms is often around, say, $1,000 to $5,000.
Okay, so there's an entry barrier.
There is.
No?
Then, storage. You need professional climate-controlled storage. That might run $15 to $25 per case per year.
Per case, okay.
Then insurance on top of that, maybe 1–2% of the wine's value annually.
Right, got to protect it.
Platform fees, if you use one, can be 2% to 4% a year. And don't forget exit costs. When you sell, auction houses might take a 10–15% seller's premium.
That adds up.
It does. I have a friend, Sarah, who started with about $3,000. She went for Bordeaux Futures, buying the wine before it's bottled.
On Primeur.
Exactly. Lower entry price. But she had to wait like 2 or 3 years just to get the actual bottle.
So delayed gratification.
Big time.
Yeah.
It just underscores this is for medium to long-term money, not cash you need the next 5 years.
Definitely not emergency funds. It's great, though, that tech has made it easier. What about these platforms? What do they offer?
Yeah, tech has been a game changer. You've got platforms like VinoVest. They offer managed portfolios, start around $1,000, annual fee maybe 2.85%.
And they choose the wines?
Their algorithm does, yeah. Based on data, they handle storage, insurance, selling. They provide reports, track provenance. Pretty user-friendly, good educational stuff, too.
Okay.
Then there's Vint. They do fractional investing. You can buy shares in a collection of wines for maybe $25 a share.
Ah, so you don't own whole bottles.
Right. Good for diversification if you have less capital, but you don't pick the specific wines. Less control.
I see.
And then, of course, the traditional route. Auction houses like Christie's, Sotheby's. That's more for experienced folks with deeper pockets and knowledge.
Right, playing in the big leagues. Okay, let's circle back to storage. You said professional storage is key. The thought of something going wrong there must be crucial for value.
Oh, absolutely paramount. It's non-negotiable.
Yeah.
Temperature swings, too much light, vibration, any of that can completely ruin a wine's investment potential permanently. Professional places guarantee stability. Constant 55, 60 degrees Fahrenheit, that's about 12–15 Celsius. Humidity around 60–70%, no vibration, UV protection, top security.
And that costs, you said, $20, $30 a case per year in big cities?
Roughly, yeah.
Yeah.
Might seem like a lot, but think of it as essential insurance for the asset itself. I know someone whose home cellar lost power during a heat wave.
Oh, no.
Yeah, thousands in value just gone, cooked. And regular home insurance, it often won't cover that kind of loss adequately. You need specialized wine insurance.
Wow. Okay. Lesson learned there. So, assuming you've got storage sorted, how do you actually build a portfolio? What's the strategy? Diversification.
Diversification is absolutely the name of the game. Spread your bets across regions, different vintages, different price points.
Makes sense.
A typical strategy might be 60–70% in core holdings, your blue chip Bordeaux first growths, top Burgundy like DRC, the established giants.
The safe bets, relatively speaking.
Relatively, yes.
Yeah.
Then maybe 20–30% in growth investments, could be emerging regions, younger producers showing great promise.
A bit more upside potential.
Potentially, yeah. And then maybe a small slice, 5–10% for speculative plays, really rare vintages, cult wines, higher risk, higher potential reward.
Okay.
For beginners, starting with wines with proven track records and active secondary markets is usually smartest.
Got it. And vintages matter a lot, right?
Hugely. Legendary years like, say, 2005, 2009, 2010 in Bordeaux, they tend to appreciate faster. But they also cost more upfront.
Of course.
And don't forget vintage, Champagne Krug, Cristal, Dom Perignon. They're often very consistent performers, and the market for them is quite liquid.
More buyers and sellers.
Generally, yes. Easier to trade than some niche Burgundies sometimes.
Okay. This is really clarifying. But staying on top of all this, it sounds like a lot of research. What resources do you actually use?
It does take research. Essential tools include critic publications like Wine Spectator, Wine Advocate for scores and reviews.
The point scores.
The point scores, yeah. Livex is critical for market data, price trends, the indices. Wine Searchers is great for checking global prices and availability.
See what things are actually selling for.
Exactly. And auction house results, checking catalogs and realized prices from Christie's, Sotheby's, Acre Merrill gives you real-world benchmarks.
How much weight do those critic scores carry? Like 95 plus points?
They definitely influence the market, especially early on. High scores can boost appreciation, but be wary of Score inflation.
I mean,
Sometimes scores might seem overly generous. You need to look beyond just the score check production numbers for scarcity. Understand the producer's track record.
got it. Context matters.
Huge context. And understanding the tasting notes helps too. Words like structured, age-worthy, balanced, those often signal good investment potential.
Right, hints at longevity. Okay, we've covered a lot of the how and why, but let's talk risks. Every investment has them. What are the unique pitfalls in wine?
Good point. Wine definitely has its own set of risks. Illiquidity is a big one.
Harder to sell quickly?
Much harder than stocks. You might need time or have to accept a lower price to find a buyer, especially for less famous wines. Storage dependence, as we hammered home, is crucial. Value relies on perfect conditions.
Right.
Authenticity is another major concern. Counterfeits are out there, especially for the super expensive stuff like top Bordeaux or Burgundy.
Like Petrus or Romanée Conti you mentioned.
Exactly. A fake bottle is worthless.
Yeah.
So buying only from highly reputable sources with clear provenance is non-negotiable.
That sounds like a potential nightmare.
It can be. Then there's vintage variation. Bad weather can impact quality. And consumer tastes can shift over decades. What's popular now might not be in 15 years. Market timing is also tricky. But the good news is, historically, top-quality wine tends to recover value over the long term, even after downturns.
So focus on the long game.
That's generally the best approach.
Okay, beyond the market risks, what about things like taxes? Any legal stuff to be aware of?
Yes, definitely important and often overlooked. In the U.S., wine is typically taxed as a collectible.
Meaning higher taxes.
Potentially, yes.
Yeah.
Capital gains on collectibles can be taxed up to 28% versus the usual 20% max for long-term stock gains. And you need to hold it for at least a year.
Okay, good to know.
Deducting storage costs. Sometimes possible, but it's complex. And those like-kind exchanges you hear about in real estate. Very limited for wine. You basically forget about them.
Yeah.
State laws also vary a lot on owning and shipping wine. Plus, meticulous record-keeping is vital purchase price, storage fees, insurance. You need it all for tax time.
So paperwork matters.
Absolutely. Best practice. Have a clear written strategy. Your timeline, risk level, regions you like, price targets, and review it regularly.
That makes sense. So with no dividends or anything, how do you actually track how your wine investment is doing? And then eventually, how do you cash out?
Right, tracking is mainly about appreciation minus costs.
Yeah.
You look at annual percentage gains, compare your wines to benchmarks like the Livex 1000.
See how you're doing versus the market.
Exactly. And you assess liquidity. How easily could you sell this specific wine right now? Quarterly reviews are probably sensible, focusing on those long-term trends.
And selling. What are the main ways?
Several options. Auction houses are great for the really rare, high-value stuff, but remember that 10–15% seller's premium.
Right.
Specialist wine merchants might buy directly, maybe for a bit less, but it's convenient. Online platforms are growing, offering competitive routes. Private sales, direct to another collector, can give the best margin but takes the most effort. And some investment platforms will handle the sale for you for a fee.
Lots of options.
Yeah. The key, again, is often patience. Try to avoid selling in a down market. And good provenance, maybe a unique story about the wine, can really help get top dollar.
What an incredible deep dive this has been. It's really clear wine investing offers something unique, doesn't it? That mix of scarcity, culture, global demand.
It really does.
The potential advantages like inflation protection, diversification, owning a piece of cultural heritage. It's quite compelling.
And I'd add, beyond just the money, it teaches patience, discipline. You learn so much about history, geography, craft. Connects you.
So, thinking about all this, what stands out to you about this whole area, dear listener? Could you see this kind of alternative asset fitting into your own investment picture?
Yeah, maybe consider that dual pleasure. The satisfaction of seeing a tangible asset grow in value alongside that connection to, living history in a bottle.
Yeah.
Could your portfolio actually tell a story?
A fascinating thought to end on. Thank you so much for joining us on this deep dive into the world of wine investment. We hope you feel better informed, maybe even a little intrigued.